Good afternoon, everybody. Thank you for joining us today, and so excited to talk about the latest buzz in the mortgage industry. And so I've got my broker, Shanelle Lang, here. Hey, Shanelle.
Hey, Amy. Hey, Walter.
And we
Hello,
have
Miss Shanelle.
Walter Patton with Mortgage Pro, and he's going to tell us more about these temporary buy down mortgages, these 2-1 programs, and things like that sellers can offer as an incentive on helping get their house sold and maybe, helping buyers get into a house. So, and apparently this is not a new thing, but it's just making us cycle back into it. Is that right?
That's exactly right. Temporary buy down programs are not new, but we just didn't hear about them too much during the COVID time period because at that time it was a seller's market. Now the tides have changed, and now it's a buyer's market. And so now we can kind of take the temporary buy down programs off the shelf and
Mhm.
utilize them again. And so, what these temporary buy downs do is they kind of give the homeowner a introductory rate for the first year. And then for the second year, it increases slightly. And
Mhm.
then for the third year on through the end of the term of the loan,
Mhm.
it's at the fixed rate at the time that the loan was taken out. Um, so once again, this allows borrowers to use seller credits
Mhm.
to ease into their mortgage payment.
And this is a good thing. This is for both buyers and for sellers. This particular webinar we're doing right now. So this is great for sellers. Let's say that you have a house for sale and it's not moving and it's priced right. Perhaps instead of doing a price drop, Mike could do maybe a small price drop to pop back up on the MLS, the feeds again. But then instead of maybe dropping $5,000, you might offer $5,000 towards a mortgage rate buy down.
That is correct. So um, if a seller is anxious to sell, for
Hmm.
instance, my neighbor, they had their house on the market for like
Hmm.
2 weeks, and then all of a sudden they dropped the price by $15,000,
Hmm.
and approximately 2 weeks later, they did get a seller, but they could have saved themselves a few $1,000s if they had considered using the temporary buy down program to incentivize buyers that way. Because if you tell a buyer that you're willing to pay seller concessions to where they get 2% off their regular mortgage for the first year
Hmm.
and 1% down off their mortgage the second year, you'll
Hmm.
definitely get their attention and catch their ear. And so that might even persuade them more than the say the $15,000 that the homeowner offered. So it's kind of like a win-win for the
Hmm.
seller and for the buyer.
Especially since some buyers are backing out of purchasing, or rather going off the mark. How would you say it? They're stopping their search, basically, I guess, because they are scared of interest rates. And I think that we don't have a good frame of reference because they're comparing it to COVID interest rates, which were unprecedented. They were just unheard of. And I don't think that's a good comparison. So, how much of so you're saying it's like if the interest rate was 7.25, the first year they would pay 5.25%, and then the second year would be 6.25, and then from year three on out it would be 7.25.
That
That's
is correct. That is
okay.
correct. So, and this in this particular, we're using the example of the 2-1 buy down. That
Yes.
is the most popular program.
Mhm.
We do offer a 1-0 program to
Mhm.
where if you don't have that much in seller concessions, at least you
Mhm.
can still get that 1 year
Right.
of discounts for that 1 year. So, this again, this is perfect if you had some leftover seller concessions to take advantage of this program.
Mhm.
And just to reiterate what you said, with the 2-1 buy down, the current interest rate is approximately 6.9%. But in your example that you just gave, you use 7.25. So again, if we were to do a 2-1 buy down, that means the interest rate would be 5.25 for that first year and 6.25 for that second year. And depending on the price of the house will determine on, the price of the loan will depend on how much money is saved. But I can tell you, a house that's approximately 200,000, that person would probably save approximately about $3,500 between those 2 years.
Okay.
Well, I'm super excited about the product being back out there and communicating. And I know that we are doing a market correction, but I think it's good. Now we get to explore how we can benefit with the correction and offering concessions again with sellers. So everyone gets excited now because, like you said, our interest rates have raised, but there are other solutions that you can work into your buying power with products like this. So I'm so excited, Walter, that you came on to share this information, because we want to let our buyers and sellers know we still have, you know, like you said, this product has always been around. Now we can bring it back to an option for buying power. So it's awesome. I'm excited about it.
And I would like to add, programs like this shows the importance that the value that realtors like you two bring to the table for your clients, and the relationships that you have with mortgage brokers like me or mortgage originators like me. Most customers will not know about programs like this to take advantage of. And so when a customer is in the process of selling or buying, they really need that education of a realtor like yourself to guide them through this process, because it's your job as a realtor to help talk that person off the edge. Amy mentioned before that a lot of people are hesitant to get into the market. And as a mortgage originator and you guys as realtors, we're here to help ease their pain or ease their thoughts. Because to be honest with you, even though we are at 6.9%, historically, that's not a bad rate. If you look back to when they started keeping records in early 1970s, we're just getting back to the point to where the rates were at the beginning of the early 2000s.
Correct.
It just looks very out there because we just came out of COVID. COVID was historically low. We never seen numbers like that before. I would like to mention that even though a lot of homeowners are hesitant to go into it because of the interest rates are at 7%, but particularly if you're renting, you're paying 100% interest.
100%, absolutely.
Yes.
You're paying 100% interest. So even though
we're not getting any of that,
right. So even if you bought a house now, you'd be at 7%. But a lot of economists, they're not planning, but they are speculating that the interest rates are going to drop within the next 12 to 18 months back into the 4s. That's what a lot of economists are.
And I've heard that as well from different sources.
Are forecasting. So our goal as realtors and mortgage originators are to get you into the house now. And then if the rates do drop, you will have the option to refinance to a lower rate. So it's not like you're stuck in the mortgage for the full 30 years if you don't want to be.
And these temporary rate buy downs, do they work for, FHA, conventional VA? Does it matter the loan type?
It does not. It does not matter the loan type. Now, USDA can get kind of sticky with that one, but the other ones are pretty flexible.
Okay.
And I would like to mention, this is not an adjustable rate mortgage. It's different from an adjustable rate because with an adjustable rate, it can go up and down throughout the life of the loan. Whereas this one, it is adjusting the first 2 years, but after the first 2 years, it's going to stay the same for the remainder of the loan, whether it's 15 or 30 years. So, and plus, when you go into the loan, you know what your interest rate is going to be on that third year. With an adjustable rate mortgage, you're not sure what your amount is going to be, because that depends on various indexes.
So when you're working on a pre-approval and you're looking at the debt to income ratio, you're going to be looking at if they did a 2-1 buy down, you'd be looking at the year 3 and on. You would be calculating off of the like the 7 1/4 example I gave, not the 5 1/4, right?
Yeah, that is correct, because we want to look at longevity. So when we are determining whether or not you can qualify for the loan, we will be looking at the fact that you can pay it at the current market rate, not at the discounted rate. So yes, thank you for bringing that up. That is very important, that we clarify that.
Amy does not miss the details, okay? Well, Walter, I have a question for you. So if somebody's watching and they want to go ahead and apply and start the mortgage process, what do they need to do?
One, they can give me a call at 334-294-3435, or they can text me. Also, they can go to findamortgagebroker.com, put in Alabama, and just find me on that website. And on my personal page on that website, it has the link to the application, and we can get started to see if they qualify for programs like this temporary buy down program.
Okay, awesome. Well, I strongly encourage people to like you also provide. If you get a call, you'll provide the numbers and the products for a person that is interested in getting started. So you have a different programs. So if this one doesn't work, you do have other things that may match for a buyer for this time in buying.
That is correct, because everybody's situation is different. We're definitely not a cookie cutter company that just offer a few programs and tell you to fit in one of those. No, I listen to you and hear what your home buying goals are, and then I go to work for you to find out which programs are best for you. I mean, if you're living in a rural area, you might want a condo. I mean, you might want a fixer upper. Once again, there are different loan programs for everything I just named. So I'm here to listen. Even if you just want counseling, I'll do that. I do that for a lot of people. I don't mind. I love educating people on the home buying process. That's just one of the joys of my profession. So, and I do want to point out one more thing about this. So if you, with the temporary buy down, if you have a promise of a pay increase, this program is definitely good for you, because if you know you're going to get a pay increase within the next 1 to 3 years, that'll help you meet that new obligation when it does hit the current market rate. So I just want to throw that out there before people.
That's good. That's really good.
Yeah, everybody wants a pay raise, right?
Right.
But I know a lot of different professionals, they have contracts and terms that outline what their pay would be over the next couple of years. So if you have a contract that shows, okay, this is your starting, but this is what it will be, that's your opportunity. So that's good. That's good.
And a lot of companies, they give a lot of cost of living increases. So if you
annually,
right. So if you get an annual cost of living increase, this might help for that situation too. So
I want to circle back on something you said, Walter, when you was talking about, like realtors like me and Shanelle, we try to stay on top of being educated on the type of programs that are out there, because, when we talk to potential clients, they're always asking us the questions about the different types of loan programs. Asking us, about down payment assistance or closing costs or, interest rates and different things like that. So I think it's really important for a home buyer to work with a realtor who has a basic education of what's out there, and then turn them over to a great, professional such as yourself who can take it further. Because, we don't see people's credit scores. We don't see their financial history, nothing like that. That's not in our wheelhouse. We have an overview, and then we turn them over to a great lender who gets into those nitty gritty details. And all we know is, you're pre-approved for X amount of dollars on this type of loan.
Mm-hmm.
And, your closing costs are going to be about this much, basically.
Right. And that's part of my counseling services before we actually get into the application in most cases, because when we're going through the counseling phase, a lot of people, after we discuss it and before I pull their credit, that's the most important thing, because they don't want that hit on their credit.
Yes.
If they know they're not ready, they like to talk about it, their situation, and some of the time the customer is like, well, I think I need a little bit more time just to come up with a little bit more money for closing costs or things of that sort. So like I said, it's important to get that counseling up front versus getting halfway down the process and then realizing you're not quite ready yet.
And if you're a potential buyer and you're talking with a lender who is not helping you, like giving you a plan, especially if you're telling them, I don't think I'm ready to buy yet, but I want to be ready to buy in 3 months or 6 months or whatever, you may want to reconsider that. Get with somebody like Walter that will walk that path with you, especially if you're a first-time home buyer. You may not know what you need to do. You may not know what's on your credit,
Right. And a lot of people don't know what's on their credit. So there's a link that I send all my customers to pull their free annual credit report. So because they can pull it for free
right.
without me pulling it and it affecting their credit score. And so things like that, a mortgage broker would know. A good mortgage broker would do.
And they have updated the annual credit report. It's really easy to access, because I've been doing it for the past 7 years since I've been in the industry. I try to take the same advice I give clients: be aware of my financial situation, what debts are out there. So every year, so now I think I did it this year, and they just text me a code, and I was able to log right on. I was like, they are really, because I know at one point they would ask security questions. I don't know what car I had in 1995.
Right.
I know.
Yeah, second pin out
the you live at in this year. Oh, I don't remember the street.
So yes, I think it's very important to know your credit, know what debt you have, and start saving, people. This is the season to save. I also saw I seen quite a few news outlets post on Facebook that most retail stores are going to be closed for Black Friday or Thanksgiving. I'm like, yes, maybe people will stay home this year and save money. So this is the year to finish the year out strong saving, because no matter what product we match you with, you still need money to buy a house. There's so many costs involved. You want to be able to have the inspection money, the appraisal money. So there is money. So my last word for the day, everyone, is let's get you in the right product. Let's get you with the right team and start saving some money.
Yes. I believe anybody can become a homeowner with the right partnerships, with the right people helping them, and with with the right attitude, following the steps. I mean, I really believe. I've had people come back 2 years later after I initially talked to them because they had worked the process of getting their credit and getting their down payment saved, and then they were able to buy, and they have been some of my happiest customers.
Right. I mean.
Absolutely.
I don't think our customers know how rewarding it makes us feel when they get into that home that they really like, particularly if they just been long-term renting. You probably heard me say this before. There's nothing wrong with short-term renting, but long-term, that's what I have a problem with. So when I'm able to assist somebody get into a house of their own and start building that equity, that just does my heart well. So I'm here to help whoever I can.
Yeah, there's times that it definitely makes sense to rent, especially if you're, a young adult, you're not well established, or maybe, your income isn't quite there yet, or you're going to be moving, job, military. There's definitely times when it makes sense to rent. But long term, if you're going to stay in an area, I'd say at least 5 years. Some people may say 3 years. I say at least 5 years. Let's work on getting ready to buy.
Mm-hmm.
Yep.
Well, it was great having y'all on here again. I think we ought to get this wrapped up. We've been on here about 20 minutes now, so we could go on and on and on. But the best thing to do would be to reach out to one of the three of us. And, if you reach out to me or Shanelle, we will get you with Walter, and let's get the ball rolling. Let's start make that plan, make that path, make it happen.
Thank you so much, Amy and Shanelle, for inviting me on again. It's always a pleasure
Absolutely.
to be a guest.
Thank you for joining us. Good to see you. And as always, excited to work with you to get some new buyers into homes.
Yes, ma'am.
Yes.
All right.
We hope to see you at the closing table soon, okay?
Yes.
Sure. That's a plan.
All right.
All right. Well, everybody have a great weekend. Talk to y'all again next Friday.
Thanks. Bye, Amy. Bye, guys.
Bye, Shanelle.